I wanted to talk about what I think is like one of the biggest myths in real estate, which is that you have to have a 20% down payment.
Yeah, that definitely is something that a lot of people think they have to have. They're saving up this money and they're like, I got to get to 20% down. So if you do have 20% down, you eliminate mortgage insurance from your loan. Mortgage insurance is an insurance that the mortgage company has that you, as the borrower, pay for, that ensures the mortgage company that if you default on your loan, they reclaim some of that loss. So that is true. If you put down 20%, you do eliminate that payment that you have to have. But there are several loan options out there where you do not have to put 20% down. Conventional has a product where you can put a minimum of 3% down. You can put 5% down, 10, 15, 20, or as much as you want, but the minimum would be 3%. FHA is a common loan that a lot of people use on their first home. You can put 3.5% down for an FHA loan. And FHA has some little looser guidelines as far as getting qualified. You can have a higher debt to income ratio and you can have a little bit lower credit score. So that is actually a popular loan for first-time home buyers to get so that they can have minimal down and be able to get into a home. If you are a veteran, VA has a phenomenal loan. Thank you for your service, where you don't have to put a penny down. You can get 100% financed with a VA loan. Doesn't matter where the property is, as long as it fits their income, or, as long as you qualify and you're within their price range, you can get 100% financed on a VA loan. USDA, United States Department of Agriculture, has a loan that is 100% financed. That loan, though, is for more rural areas, so it has to be in a specific area for you to be able to qualify for that loan. So there are a lot of different loan options out there for you that do not require you to put 20% down.
I feel like there was a time recently where you had a family, they were looking at a new construction, really set on a new construction, and this was something that came up like a stumbling block for them was the uh, bringing money to the table. So can you talk about how sometimes there are ways to like get creative with that or around money out of pocket?
Yeah, so there are definitely a lot of ways. I feel like in the market today, new construction is one of your best buys. A lot of builders are trying to sell homes. One thing that people don't realize about builders is the way that they finance the build of the home. When they're building the property, their payments on their loan are a lot less. Sometimes they don't even have payments until the property is livable. They call it getting a CO, a certificate of occupancy. Once a certificate of occupancy is issued, that loan becomes a standard normal loan, and their payment is a lot higher on that loan to carry that house. So builders are usually a lot more lenient and a lot more flexible on homes that are standing because they're costing them more money. So when you have that standing inventory, when you have those homes that are built ready to go, the builder wants to sell them as quick as possible. And especially right now, a lot of builders are offering interest rate buy downs. They're getting your interest rate down to 4.99%, and they're offering to cover your closing costs. So really all you're bringing to purchase that home is your down payment. So that's a great way to be able to get into a home with as little money out of pocket as possible.
Yeah.
There's also some ways that you can finagle the numbers, for lack of a better term. But I recently had a client that um, we offered a little less than the purchase price. The client wanted the seller to pay the closing costs, and the seller agreed to a lower price, but didn't agree to pay a lot of the closing costs. After doing an analysis, making sure that the property would appraise and was worth the value, what we ended up doing is we actually raised the purchase price and raised the closing cost so that the borrower only had to bring their down payment to closing. So it net the seller the same amount of money, as they would have with a lower price and not paying as much closing costs, but it minimized the buyer's out-of-pocket expenses so that all they had to bring was their down payment. Ended up probably costing them an extra, $40 or $50 a month on their mortgage payment, but it saved them $8,000 out of
Right.
their pocket up front. So it was definitely beneficial for both parties. Net the seller what they needed to net, and allowed the borrower not to have to come up with an additional $8,000 that they didn't really have, or even wanted to spend, so that they could spend that money on moving expenses or decorating the home or furniture, those things, rather than paying closing costs.
That's interesting. I think a lot of people don't know that you can do that. I mean, if I wasn't married to you, I wouldn't know that you can mess with the numbers. Like,
Yes.
to me, it's very black and white. Like, if it's this amount, then you pay this amount. And so it is good to know that there are ways to get you into a home that makes sense, like financially. There are ways to do that. So you hit on something that I wanted to talk about. You were talking about the new construction, how you feel like that is a really great way for people to get in the house who have, some from financial, hiccups. Because we've seen a lot of interest in new construction recently, and I feel like there's not that much new construction going on, but it is interesting. And then you hit on the USDA, which I, up until recently, really had no idea what that even meant, but you've been having some interest in properties that are in a USDA like zone. Um, how do people find? I mean, aside from like, is there a way other than like calling you for people to find out if that is that something that the builders advertise, or is that something like, how do they find out how it's zoned?
Yeah, that's a great question. I mean, some builders will, some builders won't. USDA does have a website that you can go to. Usually I just Google USDA eligibility,
Hmm.
and Google will pop up their website. You can plug the exact address in there, and it will tell you whether or not that address is located within USDA's territory.
Gotcha.
And it's a very specific territory. I mean, it's not like a straight line of here's is the area and here's not. It goes like this based on demographics. So, you can literally have a house on one side of the street that is in USDA territory, and you can have another house on the other side of the street that's not.
Right.
So you definitely need to be careful, but that website is great to, pinpoint the exact address and say, yes, this house is eligible, or no, this house is not.
Yeah. So I feel like people who are looking and they just feel like they this is a long shot. How would you encourage them?
I know people don't like to hear the word no. And I really try not to say that, because I don't think it's ever a no, you're not going to be able to buy a house, or no, you're not going to be able to qualify. It's a not right now,
Hmm.
kind of thing. And it's like, okay, here's your scenario now. At this point, there are some things that are preventing you from qualifying, but let's put together a plan for what it's going to take to get you ready to qualify.
Hmm.
And sometimes that can be, a couple months. It's like, hey, let's tweak a couple things here. Let's get a couple things going. And in 2 or 3 months, you're going to be ready to qualify for a home. Sometimes it is longer than that. Sometimes it's like, oh, it's going to take 6 months to a year. But I feel like having a plan, knowing what you need to do to get there, is much better than sitting there and being like, well, I can't qualify and I don't really know what I'm going to do, so I'm just not going to do anything.
Right.
So we are happy to talk to you, to get the information that we need to tell you, hey, you know what? Actually, you do qualify.
Hmm.
Or, hey, if you'll, go out and get a credit card and start spending some money on it every month, or, if you'll pay a couple $100 down on this account, in 2 to 3 months, you'll be able to qualify for a home.
Yeah.
So I definitely encourage people to reach out to us. There is no judgment on our side. We had some financial hiccups in our life. So
I'm like, hey, just to be like fully transparent, when I met David, he helped me clean up my credit.
and her credit's actually a bit higher than mine now, which
Mm.
kind of ticks me off a little bit, but that's good. That
Thanks,
was the
babe.
point. So yeah, really, it's like, to me, having a plan is better than sitting around not knowing what to do. So please reach out to us. Let us look at what you have. Let us derive a plan for you, and say, okay, this is what you need to do, and this is how long it's going to take you to get there. And then that gives you something to focus on, to work towards, and be able to purchase a home sooner.